Hello, everybody. Sorry for the little bit of a delayed start. Excited that you guys are all here and joining us. I'm joined by Mike Albert. I'll let him introduce himself, but he's going to be helping you with some very, very crucial parts of your business, your cash flow. I've known Mike for a couple years. Always been super, super impressed with not only his knowledge, but also his relatability and ability to share that knowledge with people. He's helped out several of the members of Unreal Collective, so I've seen it in action, and I'm super excited personally to work on this model. If you have not already downloaded the model, there was a link at the very top of the chat. Mike will talk about that as well. And lastly, as we go through this, there is a function at the bottom of the screen called Ask a Question. If you have a question, you can either enter it into the chat or go to the Ask a Question, enter it in that way, and we'll try to get to it here towards the back half of the hour. So with that, Mike, I'm going to turn it over to you.
All right, so you guys can see me. Jay, cool. All right, so thanks for jumping in, guys. I know cash flow is one thing that every business owner that I work with struggles with to some degree, so very important topic. Very little background on me. I consider myself a fractional CFO, so I help small businesses who aren't ready for a full-time CFO get the education that they need and understand where they're going and where they're at. So that's a very brief background on me, but let's jump into the content for today. All right, so before we get started, I just want to make sure that you guys have my contact info. If you come away from this and you have questions you want to ask, you didn't feel like you were able to ask at the time, just jot this down, mike@mikealbert.co. So before we get started, just like Jay said, you can download, there's two ways to download a copy of the model. There's an Excel version in your email, if Excel is your jam. If you're more of the Google Sheets aficionado, if you go to jklaus.com/class or cashflow, you can make a copy. And once you get there, you can just go to File, make a copy, and you will be off to the races. So if you are going to use the Google Sheet, please make your own copy. Let's not work within the live version that I'm going to be going through. Go ahead and make yourself a copy. All right, so let's go over some goals for this webinar. So when I was thinking about this, there are a few things that I want to make sure that everyone gets out of this. I want to just discuss cash flow in general and give you a framework to think about how it fits into your business's financial management. I want to review this cash flow model, and I want to teach you how to use it so that you can start to import your business's data and create a tool that you can use to better understand where your business is going. The ultimate goal is to give you peace of mind and confidence in your numbers. And then I want to get a chance to answer any questions you have, either about the model or just in general cash flow or just any real business finance question. So here's a quote that I love. A friend of mine, Adam Lehman, he said, cash flow is blood flow. Business isn't about cash and life isn't about blood, but without them, you're dead pretty quick. And I think this nails it very well. If we don't, as small business owners, manage our cash flow well, we will not make it. So unlike anything else in your business, it is the one thing that will shut you down. So it's very important that we have a tool and a framework to understand. So that's what we're going to try to give you today. Just as a general overview here, definition of cash flow, it's the net amount of cash moving into and out of your business. This is something that's pretty easy to see the cash that's moved in and out of the business for the historical stuff, things that have happened in the past. That's represented on our cash flow statement. It's one of the 3 standard financial statements. So here's just a general example of what a cash flow statement looks like. And Whether or not you really understand this cash flow statement is kind of irrelevant. All of the details may be a little bit confusing. As long as you understand this bottom number, which is the net cash increase or decrease for the period, that's really what you're trying to gain from this cash flow statement. So this is, for this specific company, what's happened from January 1st through today from a cash flow standpoint. In this bottom line, if it's a positive number, it means the company generated positive cash flow, meaning they have more cash in the business than when they started the month. For the negative numbers, more cash was spent than they brought in. So that, from a historical standpoint, is what the cash flow statement represents. But what really matters to a business is understanding our future cash flow. But it can be very tough for a couple reasons. Number one, the future is very unpredictable and it's impossible to perfectly forecast. And from my experience, there are really no great tools out there that do a good job of organizing all of these assumptions in a way that lets us understand where our cash flow will be over the next short-term period. So the majority of the people that I work with, what they end up doing is just ignoring it. And I think for the most part, I think that's the main sentiment that I get from my clients, is that because there's no great tool, because it's so hard to do, we just ignore it. But if we go back to that statement that Adam Lehman said, it's the lifeblood of our business. It's not something that we can ignore. So the goal today is to give you a tool that you can use to get more line of sight to what your cash flow is going to look like in the future. So just to quickly go into how and why I developed this model, about 5 years ago, I took my first leadership role with a company doing about $12 million per year. It was an e-commerce site, and we sold T-shirts. And my first week on the job, I sat down at my desk, and the CEO, the owner of the company, came in and said, "Hey, cash flow is getting pretty tight. I really need you to manage this." And with my background, I worked basically corporate financial planning and analysis for one of the biggest retailers in the country. And we worked very much in kind of the profit and loss and balance sheet statements. And this was the first time that I really had to manage cash flow in a tight situation for a business. And as anyone, I went to Google. I started to search for solutions to this problem, and there were no great tools out there. So that didn't work for me. I had to create something. So this tool I've developed over the last 5 years, and I've been customizing it and tweaking it as I've gotten smarter and better at managing small businesses' finance. And I hope that you can use this tool to help better manage your finances. So I've been improving this thing over the last 5 years, and I think it's finally ready in a state that just about any small business owner can customize it to better manage their money. So that's enough background on this. Let's go ahead and get into the model. So I'm just going to do a general flyby of the model, go through just at a high level what each sheet does, and then we will kind of go into the details of how to update the information so that it fits your business. So the first tab here is just a README. If you get through today and you want to, and forget what we talked about for a specific sheet, there's a pretty good overview of what each sheet does and the information that should be input into that sheet. So this is kind of a reference for you. The first two blue sheets here are what I call reports or outputs. These are going to be where after you've input all of your information, this is where you can see kind of the result of all the assumptions that you have built into the model. And to go over this first summary cash flow report, basically, it's going to give a value for each day. So there's one row for every single day for the next 90 days, starting with today. From left to right, you've got the date, the day of the week that day falls on. You've got the forecasted starting cash balance of the business. You've got any cash going out, any cash going in, and then the net change in cash. So the difference between the cash outflows and the cash inflows, and then an ending daily balance. Now, what this does is it'll feed this chart here to the right. And this is, for the visual people, is going to give you a really good overview of, based on all of the assumptions we have built into our model, what does cash flow look like for the next 90 days? So you can see in this example, cash flow looks like it's growing. So we can expect, if all of the assumptions in the model come true, we will have more cash at the end of this 90 days than we did when we started. So that is the summary cash flow report. Going over to the detailed cash flow report, this is going to give more detail into what happens on each day. So you can see for rows 14 through 23 on today, we can expect one membership revenue payment. And let me back up 1 second here. So this model is a template that I've used for a gym, a fitness facility. So their revenue comes in based on memberships, and their clients are billed on a specific day of the month. So if a client signed up on the 19th of the month, they're billed on the 19th of every month thereafter until they cancel. So that should give you a kind of a lens under which to understand how the cash inflow is going to work for this specific model. And as we go through the different sheets, I'll try to touch on some of the differences based on different types of business. I know some businesses aren't membership driven, so cash will come in a different way. But you should be able to, regardless of your type of business, use this model to fit your entity. So, for example, here on this detailed cash flow report sheet, on the 20th, tomorrow, we can expect a regular insurance payment of $125 to happen. We have a irregular expense for the photo shoot for this gym's competition, which is going to cost around $2,000. They're expecting a membership revenue payment of $1,700 or $1,100, and then they have competition sales tickets for about $2,000 coming in. So basically, if you go back to the summary cash flow report as 1020 is one line, and this is the summarized data for everything that's going to happen on that day. This detailed sheet is where you can see all of the detail for what happened for that day. And we'll go over here shortly how we get data to flow to that section. So those are the two real outputs for this model. Now I want to go over how do we update and input data into this model to make it fit our business. So the first step, and let me back up, all of these steps are detailed on this README sheet. Okay, so once you leave this webinar, if you need to refer back to the steps, it's all laid out here. So the first thing we'll do is we'll enter our starting balance. So here is where I would log in to my bank account, and I would enter the cash balance for my business's operating cash fund. So say, for example, today I log in, we've got $15,000. The model will always default to today's date, and I would recommend leaving that default start date to today unless you have a specific reason to. 90% of my clients just leave this as defaulted to today. And what that does is every day that I log in and update this sheet, I don't have to go in and change a date. It's just going to automatically be start from today's date.
Mike, quick question for you, if you don't mind.
Sure. Yeah, go for it.
So just to restate, this green tab that you're talking about now with this input, this is the first sheet where we should be putting in an input. The first two blue tabs are output sheets with one's a summary, one is a level of detail. but they're output sheets that are going to be shown from the inputs that you're going through now.
You got it, man. So yeah, we're going to go through now the process of updating and inputting your information into what I would call the input sheets. So the input sheets are everything but these two report tabs. So thanks for that clarification. And definitely stop me if you feel like I'm missing something here as I go through this. So once we get the starting balance entered, we are going to move into updating the cash outflows. So a cash outflow is anything that we think can expect money to go out of our bank account to pay for something. And we're going to break that down a couple ways. So number one, we're going to have a section where we can enter our regular monthly cash outflows. And what I mean by regular monthly cash outflows is that it happens on or around the same date every month, and the amount is either exactly the same or very close to the same. And that's kind of a judgment call on your end. If, for example, I know that on the 3rd of every month, I pay for Facebook ads, and it's usually around $100. I can use this sheet by inputting the day of the month, the expense type, and I can enter a description here if I want to further identify that line item, and then the amount. Now, if, for example, this amount came in at $125 as opposed to $100, if that $25 is going to really matter to your business, I would recommend putting it on another sheet, which I'll go over in a second. But these expenses that end up on the regular monthly cash outflows should be consistently landing on the same day of the month and consistently in the same range of amount. So if I were starting from scratch and trying to input and enter data onto this sheet, there's two places that I would refer to. Number one, if you have like QuickBooks or you manage your books somewhere, I would use that as a starting point, and I would go through line by line on my my transactions, and I would make the determination of, is it regular, meaning does it happen on or around the same day of every month, and is the amount close to the same? And if it is, then I would park it on this sheet. Okay, so for this gym, we've gone through and we've identified the regular monthly cash outflows. We've entered the day of the month that they fall on. We've entered the expense type, entered a description, and entered an amount.
Hey, Mike.
Now, where this is going to... Go ahead.
Could you maybe hit zoom in, hit the Command plus, and make it a little bit bigger?
Yeah. That good?
That's good.
Cool. So we've gone through, we've entered all of the regular, identified and entered all of the regular monthly expenses. And where this is going to end up flowing is on the detailed cash flow report, columns Q through column R, all of our cash outflows, it's going to fall to the proper day. So, for example, the first one we find here is an insurance payment that happens on or around the 20th of every month for $125. So if we go back to the regular monthly cash flows, we can see, if we scroll down here, insurance on the 20th of every month for $125. What that will also do, so this is October 20th. If we scrolled all the way down to, I'm not going to do it just because it takes a minute to scroll down, but on November 20th, we should have the same cash outflow on the 20th. So I'll just go ahead and do it. So we can see on the 20th of November, regular insurance, $125. So any date that is the 20th, that will show up. And so is the same for the rest of the expenses. So these will show up every month on or around these dates. One other slight thing to mention is that in certain months, there aren't 31 days, but you're still going to have to pay your electricity bill. The model will pick up and pay that expense on the 30th. So it's going to pull the last available real day for you there. So that covers the regular monthly cash outflows. Now let's go over irregular cash outflows. So there's a couple things that will fall on this sheet. Expenses that are one-time. So for example, in this company's scenario, on the 20th, they're having a photo shoot for a competition. But that's not something that's going to happen regularly every month. It's just a one-time expense. So they would put this on the irregular cash outflow sheet. Another common cash outflow that I see are for companies that do payroll every 2 weeks. Because that payroll number doesn't happen on the same day of every month. Some months you're going to have 3 payrolls, some months you're going to have 2 payrolls if you're going every 2 weeks. That is where I would put all of the dates for expected payrolls. I would enter a payroll here in the expense type and then put your average payroll number here. And I would do that individually for each upcoming payroll for the next 90 days. If you really want to get ahead of the game, I would just do 6 months worth of dates and enter those in bulk all at once. And those irregular cash outflows, they're going to land in the same place under the cash outflow columns. So the first one we find here, we've got on the 20th, tomorrow, an irregular cash outflow of $2,000 for that photo shoot for the competition. So again, irregular cash outflows are things that don't fall on a regular schedule or things that have amounts that are going to vary wildly from payment to payment. The last cash outflow that we're going to enter are things that are outstanding. So think of these as, these are typically just checks that have been written that have not been cashed. So in this scenario, imagine that I wrote a check on 10/15 for common area charges to my landlord. And these were for quarter number 3, and they cost $2,000. I gave him the check. I know the check is going to clear the bank in the next few days, but it hasn't hit yet. It's not yet reflected in my cash balance. So if I enter that check here, it's going to show up in the detailed cash flow report kind of up here in the top. In this top section, these first 10 lines are going to reflect the change that's going to happen based on those outstanding cash outflows, checks that have been written that haven't been cashed, and outstanding cash inflows, payments that I've received but haven't affected my beginning balance yet. So in this example, we entered our starting balance at $15,000 on the enter starting balance here sheet. But I know that I have a $2,000 check that's outstanding for common area charges. So I don't want to think of my cash balance as $15,000. I need to reflect this $2,000. So what this is going to do, it's going to back out the $2,000 for your common area charges, and it's going to receive this outstanding payment and bring your balance, your starting real balance, down to $14,000.
Hey, Mike, we got a couple of questions here, if I could interrupt and give you those.
Yeah, go ahead.
The first just happened while we're on this topic. Eric asks, what happens when you have more than 10 transactions in one day?
We need to build you a new model with more lines. This model will only catch up to 10 transactions on a specific day. In order to address higher transaction quantities, we would just need to build a model that has more line items, frankly. So if that is something that you're interested in, shoot me an email afterwards and we can figure out how to do that.
Had a couple more that I'll hit on briefly. Jacob asked about how much time do you spend daily on entering, reviewing, then making decisions based on your cash flow data?
So for me to update this on a daily basis, it takes me less than 5 minutes. If you're really tight and you're having to use the model to weigh decisions, it's going to take you more time as long as it is. It's going to take you as long as it will take you to kind of input those potential transactions that you're thinking about making and make your decision. So for me, it takes 5 minutes max to update this on a daily basis. Because once you've done the work of inputting your regular monthly inflows and outflows, you've done most of the work.
Okay. Ryan, got your question as well. Could you give me some more, I'm addressing Ryan. Ryan, could you give me some more detail on that question? I'll ask it here soon. Cool. Mike, go ahead.
Okay, cool. So that covers the 3 tabs that you can use to enter expected cash outflows. So we've got 3 options. Regular monthly, which means falls on the same day of every month. The amount is fairly consistent. If it doesn't fall into that category, it should probably go on irregular cash outflows. And then the last option you have for things that are outstanding would be the outstanding cash outflows tab. Now we have 3 tabs for inflows that reflect very similarly to the cash outflows. The only difference is it's money coming in. So let's jump into the regular monthly cash inflows. Now, let me say this. For this example, like I said, this is a gym. This template is set up for a gym that bills all of their clients on the same day of every month. So it's very easy for them to say, on the first of every month, I bill around $1,600. That fits their business. It's very possible, like for example, someone like me who is who bills clients on an irregular basis, I'm going to have less on my monthly recurring revenue sheet than I would on my irregular cash inflow sheet. Most or all of my revenue would come on the irregular cash inflow sheet. So depending on the type of business that you run, this could be this is where you're going to have to use your imagination and fit your business into this tool. So regular monthly cash inflows, consider these inflows that happen on or around the same day of every month and that the amount is consistent. So I know that based on the members that this gym has signed up, they expect around $1,900 on the 5th of every month because of the membership base that they have on that specific day. If I was running an e-commerce store, this is also probably a good sheet to forecast my sales. Now, you're probably not going to have wildly different numbers like this. It may make sense just to plug an average daily sales number. So if on average for the last couple months I've averaged $500 per day, maybe you plug $500 all the way down for each one of these days, unless you have a better way to forecast your sales. If you have a better way to forecast your sales, go ahead and input that. But I'm just trying to give some scenarios here that hopefully will apply to your business. So again, that is regular monthly cash inflows. Actually, let me go over one more thing here while I'm on this sheet. If you're a freelancer and you have a client that's on retainer that say pays you on the 13th of every month, and the number is the same, say they pay you $1,000 every month to manage their social media, that would fall on this sheet. That's a good place for that regular reoccurring monthly cash inflow to land. And where this is going to end up on that detailed cash flow report is just here in columns A, B, and AC. That is where that regular monthly revenue is going to show. So for example, on the 20th, tomorrow, This gym is expecting $1,100. So if we go to this sheet here, we'll see that the 20th of the month is about $1,100.
Mike, Katie asks, what about quarterly regular payments?
So, great question. If you want to include quarterly regular payments, what I would do is I would put these on the irregular cash inflows. So yes, your payment is regular in that it happens on a consistent basis, but this model is set up to only consider regular, meaning monthly. So what I would do, let's say that let's say 1/1/18. Oh shoot. 1/1/18 was the first payment. And they pay me $1,000. What I would do then is do 4/1/18, 7/1/18, and then I just copy this down. So what I'm saying is, if it's not monthly and regular, it's going to go on this irregular sheet. And all you have to do is just pick the day. And that can be quarterly, it can be every 45 days, whatever it is. You're going to have to assign a specific day and a specific amount for that to pick up. So hopefully that answers your question. So jumping back to this specific scenario, this gym, they have a competition tomorrow, and they're expecting about $2,000 in sales from the tickets for that competition. That's not a regular monthly inflow that they can expect. So that goes on the irregular cash inflow sheet. So they pick the date that they want this money to be reflected on their bank balance as 10/20. And then they also know that we have an apparel order that we're going to launch on 11/15, and we expect our customers to buy about $2,000 worth of apparel. So these will then flow to the detailed cash flow report. We can see on 10/20 here, we've got the competition ticket sales showing up on 10/20. So these will fall specifically on a day, whatever date you have input into the date column. So that's going to catch those two tabs. And the last place that we can input outstanding cash inflows would be this outstanding cash inflows sheet. Now, think of this as, if you have a main operating checking account, maybe you have a Stripe transfer that, or a PayPal transfer that is in transit, and you started that transfer on 10/18, so it hasn't yet cleared your bank. It's not reflected in your bank's starting balance. It's about $1,000. We want that to be reflected. Right here is where anything that you have on that sheet will flow. And what it does is, taking your starting balance per the bank, it's going to subtract the $2,000 you have in outstanding common area charges, the check you wrote to your landlord. It's going to add the $1,000 that you expect to clear any day now, and then start from the net of that. So you can use that sheet for that. Now, the very last tab. Some of you this will not apply to. In fact, very few of you will this likely apply. And it has to do with remainder days for cash inflows. Okay? If, in this specific example of the gym, they have clients that signed up on the 31st of the month. And say, for example, in the month of November, there is no 31st of the month. The question is, do you want to still reflect that cash coming in? In some scenarios, in some businesses, you do want to reflect that. For this gym, they're still going to bill the clients that signed up on the 31st that get billed on the 31st, even if the month only has 30 days. So in that scenario, this would be checked yes. There are some scenarios, say I own an e-commerce company, where if I have a regular monthly cash inflow schedule on here, and I have a value on the 31st of the month. Let's say I plug $500 because $500 is my average daily sales on my website. We don't, because there's no 31st of November, we don't want this $130 or this $500 plug showing up in our cash flow because we're not going to actually get that money. So in that situation, you would just unselect and click no. And then for any day or any month that has a 31st, or also February where there are a few remainder days, it will not count revenue that's on that regular monthly cash flow sheet, if that makes sense. So that is all you have to do to update this model. I know it seems a little bit intimidating, but for me, if I was to give advice on getting this sheet updated, again, I would go back to my financials if I have that, and I would go transaction by transaction and try to find a place for the future. Where can I catch that expense on this sheet? What's the best place for that to live? And then if I don't have financials, or the second place I would go would be my bank statement, and I would go line by line, and I would try to put a value in there for each area. The last thing I'll say before I open it up to questions is I very much recommend, if you're not already doing this, is to build in your owner compensation into this model. I want this model to reflect paying myself. I think that's one of the biggest mistakes I see businesses make, is not accounting for paying themselves in their financial planning. We think of paying ourselves as like the last thing to happen. Let's get that in here, and let's see what cash flow looks like, assuming we're going to pay ourselves what we need to pay ourselves. So I would like at this point to open it up to any additional questions that you guys have. And I will stop sharing my screen because that is creepy.
Cool. Yeah. So guys, if you have questions, put it into the ask a question area. I've got a couple here, Mike, but one of the things that I want to piggyback off of what you just said, can you talk about more of the mistakes people tend to make, whether using the model or just in general?
Yeah, that's great. Perfect. So when I work with clients, there's like 3 general buckets that I try to help people. Number one is, and I kind of go sequentially in this order. Number one, where are you? So what I mean by that is, do you have current financials? Are you getting them on a timely manner, and are they reliable? So a lot of the businesses I help, when I start with them, they don't know where they are. They don't know if their business is profitable. They don't know what cash flow is like. That is the first step in trying to get to where you want to go, is understanding where you are. I mean, if you think about this from a map standpoint, if I wanted to try to get to New York City, I would need to know where I am starting from to be able to get there. If I just got plopped down anywhere on the earth and I wanted to get, even if I knew exactly where I wanted to go, if I don't know where I'm at, it's very, very difficult for me to navigate to New York City. So number one is, where are you, right? So do you have current, regular, reliable financials? Number two is, where do you want to go? So let's say I know exactly where I am. I'm in Columbus, Ohio today, and I want to go to New York City, right? That's very easy for me to figure out how to get there. Same thing for your finances. If you know what your current situation is, you know what your future situation that you want to be in is, then we can reverse engineer how to get there. But if you're not clear about where you want to take your business, that's number two. And then number three is tools like this cash flow sheet, tools like financial model, tools like having a framework to be able to check into your monthly and quarterly results, basically reverse engineering from point A to point B is the third bucket, where I see people struggle because they don't have the background, they don't have the they just don't know the right framework and tools, and how to navigate between the two. So those are like the three areas where I see people make mistakes or get tripped up.
So, to piggyback on that, Katie just asked a great question, which was, will this system only work if they have current financials to use as reliable inputs?
You can update this model without having financials. What I would do if I didn't have financials and I was kind of running a business, or maybe I'm a freelancer, or you can even use this model to run your household. Frankly, I have a model, a copy of this that I use to run our house's finances. And basically, all you need to start is I would use my bank statement, and I would just go line by line and ask myself, is this regular expense or a regular inflow? If it's not, on what schedule does it happen? And that would be the basis or the starting point that I would use to understand, what are like the main core of my expenses. And then it's a matter of like saying, all right, in the next 90 days, what isn't reflected? So if I'm considering buying a laptop, or, I want to hire a new employee, you can use this tool. You can temporarily input those values into the model in the proper place so that you can make an informed decision. So if I've got a big decision, like I want to buy a big piece of equipment for my business, and I don't have a context under which to make that decision. I think most of the people that I talk to, they don't have any kind of understanding of how that decision is going to reflect in 90 days. They just kind of say like, I just hope that this is the right decision. So let's say I wanted to invest in a huge piece of equipment. I would just throw that in the irregular cash outflows, and then I would go back to that chart and see, does it like sink me? Does it take me to zero, or does it take me too small? Or can I make it work from there? So use this tool as not like a static thing. Like you can really interact with it, and any assumption or decision that you're weighing, use it to help make an informed decision.
Awesome. Another question here from Ryan. He says, do you recommend prioritizing irregular entries over regular entries? In some context, he's saying, do you see owners often forgetting one category over the other?
It's a good question. I think it's most, like if I was like going over a hierarchy of what's most important, I think let me back up. This model will be as good as the inputs you put into it, right? So if your assumptions that you have in the model are amazing, you'll have a very accurate forecast of what your cash will look like in 90 days and every day in between. If there are things that are missing, and this is kind of the hard part of, forecasting or doing, or like trying to jump into the crystal ball of like what's going to happen. If you're missing things consistently, this will not do a great job of forecasting your cash flow. So it's something that you have to get better at over time. I think hierarchy number one is priority number one is we need to get the regular monthly stuff down on this sheet. I think that's priority number one, because if you're missing big things on your regular expenses or your regular inflows, the model just won't be very accurate for you. I think then it's like refining and catching and becoming more aware of, all right, what things are irregular that happen on somewhat of an expected basis, and finding a place that will filter them into kind of that detailed sheet in a way that reflects what reality will happen. I hope that answers this question.
You just gave confirmation that it did. Last question that I have right now. So guys, if you have more questions, please continue to enter them. Would you add transfers to savings as an irregular cash outflow, assuming moving to a business savings? Or is that not a true cash flow move for the model since the money stays in the business?
Yeah, so I know Eric, and I know, so we both share I think he still shares this thought that there's a book out there that I really like my clients to read. It's called Profit First. And basically, it involves this concept that, like, what is it, Parkinson's law, that if we have a resource, we'll use it, is kind of the general summary, is that if you have a savings account that you're using for your business as like a reserve account, or like your rainy day or your war chest, whatever you want to call it, I would personally, and this is just the way I would do this, I would only include my operating cash in my starting balance for the model. So if I had $10,000 set aside just in case I need it for my business, I would not personally include that $10,000 in my cash starting balance. I would only include, if I have multiple accounts, what I would call my operating account, which means this is what I run my business on. To create a full financial picture, what other financial tools to use? So if I kind of go through, priority number one, like I said, is where are you? So most of my clients run on QuickBooks Online. So having either a bookkeeper or learning how to do it yourself, accurate and timely financials, is very important. That is a tool that I use, QuickBooks Online. Outside of that, there's this cash flow model that I use to help people understand the flow of money coming in and out of their business. And then outside of that, it's a lot of like financial modeling, and it doesn't really have to be that difficult, but basically I want, Jay, can you mute? Sorry. I want to be able to give my clients a picture of, if this is where you want to be in 5 years, what does that mean financially? So basically using that as an end state or a target end state to work towards. And then in between, where are you now and where do you want to go? It's more just a flow of, this is what we thought we'd do, this is what we did, where can we improve? Good question, Katie. Anyone else have a question?
While we're waiting on that, Mike, if there are no other questions, first question is there anything people didn't ask that you wish they would have? Second question, you can answer in either order. How can people get in touch with you? Just remind them of that, and maybe even spitball about your podcast.
Yeah, for sure. So I'm glad you asked that question. So I think one of the things that, look, I'll say this, 90% of the small business owners I talk to, not even specifically clients or just business owners in general, they don't have a good idea of what their finances are. I'm just going to say it. They just don't. And while that's a big population and it can give you some like comfort and like, just because I don't have all my shit together, I'm not like a bad person. I'm not a failure. Most people don't. But at the end of the day, your financials are your business's scoreboard. And you would never play, say a season of basketball. Imagine the NBA going to the 2018 season. We're not going to use a scoreboard. No scoreboards. It would never happen. Like, it wouldn't even happen for my son's little league t-ball games. Like, they keep score. If you want to get to where you want to go in your business, you have to understand your finances. Now, you don't have to be the most sophisticated finance person, but at a general level, you need to understand the money coming in and out of your business, and you need to be able to have a confident conversation about that. And just use and consume whatever resource is going to work for you. There's a great tool called Google. Just try to learn whatever you can until, or find. Or you're just not going to understand where you're at. You're not going to get to where you want to go. Let me answer this last question. Good habits, suggestions for keeping good books. Or perhaps another session. Katie, I'd love to jam on that with you. I think it is a consistent habit. So for my books, I log in once a week, pull my transactions in QuickBooks. They make it really easy. I have rules set up that makes it even more easy. And, I spend 5 minutes a week updating my books. So I think there's a lot of pre-work and that needs to happen to get it to that point. But that's where someone like, if you want to shoot me an email, let me know what kind of business you run. Like we can sit down and put together a plan for you to get what you need when you need it. And that's what I spend my time doing, is helping small businesses who need to get on top of their finances and understand better. So let me go into last thing here. So I guess my shameless plug here, guys, is I am creating a podcast, and it's going to address basically these kinds of problems. And it's going to come from the lens that, most of the small business owners that I work with and that I talk to and I'm friends with, we all understand that we're just people trying to figure it out. I think a lot of times people outside of the entrepreneurial world think that we are these superhumans that have it all together. Like, we don't have it all together. We're trying to figure it out as we go. And basically, as I go through, my practice of helping people, I want to share the things that my clients are trying to figure out, or they have figured out, and some of the things that I'm working through as well. So if that is something that's interesting to you, I'm going to deliver it in a kind of an interesting way. I am delivering it via email. And the reason I'm doing that, rather than going at this point through like iTunes or one of the big podcast distributors, is that I want to create a little community that feels safe to be able to share where we're struggling, because frankly, there aren't enough places like that for entrepreneurs. We all feel like we have to have all our shit together, but when in fact we don't. We're all trying to figure something out. So I want to create a small community that where that is the norm, as opposed to what's out there today. And I'm going to deliver this via email. So if you could go to my website, if that sounds like something you're interested in, mikealbert.co, scroll to the bottom, there's a newsletter. If you sign up for that, once I launch this podcast, I will start delivering it to your email inbox. Other than that, you can contact me if you have questions that you think of after this, or maybe this model, or there are things that you're not quite sure how to make it work for your business. I'd love to try to help make this work for you. Email me, mike@mikealbert.co. And if no one else has anything, I'll wrap it there. That's all I got, Jay.
Cool. Thank you so much, Mike, for sharing that. That was awesome. I'm entering your email address here now into the chat so people can get a hold of you. And guys, I will send you a replay of this this conversation, and obviously you should have a link to the spreadsheet. I'll send another link for that as well. I'll let you guys know when Mike does have his podcast launch. I'll also follow up with you about that, so you can be on the list for him and get a hold of that if you're interested. Cool. Thanks, Mike. Appreciate it. Thank you guys all for taking the time this afternoon.
Thanks, guys.